The situation for precious metals is escalating quickly. So much so that right now, gold is the most crowded trade on Wall Street. We're going to look at that and a number of other key factors that are pushing precious metals, and I think also cryptocurrencies, to new highs as we move into the next 2 to 3 years. First, thank you for being here. Thanks for being part of the basement. It's a big deal when you come down here and join me. Please subscribe to the channel, share this with your friends. Super chat, super thanks are never expected, but always very much appreciated. Let's dig into this new information we have about gold and how it is becoming the most crowded trade on Wall Street from Yahoo Finance. After surge to record highs, gold overtakes the Magnificent Seven as the most crowded trade on Wall Street. This is remember the Magnificent Seven? We thought they were just going to go higher and higher forever and ever. Well, gold has surpassed the Magnificent Seven tech stocks as the most crowded trade on Wall Street as the precious metals surge to record highs this year amid volatile markets and uncertain economic backdrop. According to the latest Bank of America Fund Manager Survey published this week, nearly half of the fund managers surveyed see long gold or bets that gold prices will rise as the most crowded trade in the market right now. This marks the first time in 2 years that fund managers did not see the Magnificent Seven as Wall Street's most crowded trade. So remember, guys, the Magnificent Seven, we're talking about NVIDIA, Microsoft, Amazon, and there's a few more, I think Netflix, but we're basically talking about the big tech companies, and gold has silently overtaken them as the most popular, most crowded trade on Wall Street. What is that telling us? And why? That may beg the question, why are we not hearing about this more on the front page of the Wall Street Journal or CNBC? I wonder why, because gold and silver are alternatives to the fiat money system, much like what a lot of people refer to as digital gold, Bitcoin, and cryptocurrency. I think this bodes very well for the future of all of the alternative assets. And why is this happening, you might be asking? Couple key reasons. Number one, tariffs are creating mass uncertainty in the economy right now. Big cuts to government spending are creating massive uncertainty in the economy right now. The stock market was already in bubble territory before all this started, and many will argue, and I am included in that the stock market is still pretty much in bubble territory. The weaponization of the dollar, people are moving away from the dollar into dollar-denominated assets. A lot of that started during the onset of the Ukraine war situation. And finally, right, anybody with a calculator and half a brain, any of us who passed third grade math class can look at the U.S. debt clock. And here's the U.S. debt clock. We are closing in on $37 trillion in debt. Okay, let me remind you, 1 trillion is equal to a million times a million. And we have 37 trillion in debt. That might explain why we have almost 325,000 debt per taxpayer in this country. And anyone who's alive and considered a U.S. citizen now owes a hefty $108,000. But where it gets real scary, guys, is when we go down here. Let's draw. It's been a while. Let's draw on and we'll use orange today. When we go from the debt down here to the interest on the debt, this number that I'm circling in orange, which is $1 trillion in annual interest that we are now paying on the debt level. Remember, that feeds back into this number, right? The budget deficit. And guess where the budget deficit feeds into? It feeds right back into the U.S. national debt. This circular motion that you're seeing there is not a merry-go-round. No, it is a debt spiral, and it explains a big reason why a number of big investors, central banks, sovereign wealth funds, big hedge funds, big wealthy family offices are moving to gold like no other time in history. All of this in a backdrop of so much uncertainty, because the icing on top of the cake is we also have political uncertainty in the United States, because we get this shocking headline today, Thursday. President Trump says, quote, Powell's termination cannot come fast enough, referring to this gentleman right here, Jerome Powell, right, the chair of the Federal Reserve. Guys, it is not a good thing when the president of the United States is putting pressure on Federal Reserve Jerome Powell again on Thursday by saying in a social media post that he should lower interest rates and that Powell's termination cannot come fast enough. Powell was speaking on Wednesday of this week at the Chicago Economic Forum, and basically I was watching it and my blood pressure went up because he was explaining stagflation without saying stagflation, and saying that basically the Fed is in a very, very difficult situation right now, which further adds fuel to the reasons why so many people around the world are moving to gold. Now, you know what moves after gold? I mean, right now, the current gold to silver ratio sits above 100. It's insane, okay? Silver will play catch up to gold and will probably do so within the next, I would say, 4 to 6, maybe 8 weeks. And the fundamentals behind silver, right, the supply deficit that we're dealing right now creates an even more explosive opportunity for the silver price. You may get mad at me for saying this, but I think that we could see $40 and $50 silver much, much sooner than any of the big analysts are talking about. And at the same time, we have a situation where the DXY, the dollar index, is decreasing below 100. Let's go take a quick look at that, because that, right, when we get this DXY index in the 97, 96 range, will be even more power behind the silver rally. Here's a quick look at the DXY index, which is below 100 for the first time in a while. Let's take a look at the 1 year chart. Okay, you can see definitely the first time in the last year. And if we go back 3 years, again, right, the first time in 3 years also, it tried a couple times, but now has actually moved below 100. And let's go back to see when the last time that we were healthily, it was back in 2022. So a move below, right, got down to 90 in 2021, got down to 90 range in 2018, but has been as low as 75 back in 2011. Now, remember what happened to the silver price back in 2011. That was when silver at last hit $50 per ounce. If we get a DXY index reading down to 75 again, we're going to see numbers more like $70 or $75 per ounce in silver. Just my opinion. Don't make any financial decisions based on anything I'm saying. I also want to say thank you for joining me today, and thank you to our channel sponsors, our friends at MoonPay and our friends at Ledger. Ledger is the leader in hardware wallet technology in the crypto sector, allowing you to secure your crypto. You can learn more about them at ledger.com, and MoonPay is the on-ramp for people who want to convert fiat paper money into crypto. They're the leader in that sector as well. I'm very fortunate to have both of them sponsoring Ron's Basement. I'm also very fortunate to have you here as well. I want you to know you're always welcome to come back. Thanks for being here today, and I will see you soon.